If you look at where the India market is today, it's like where the China e-commerce market was in 2006 or where the US e-commerce market was in 1996. They're about to break through that 20% internet penetration. And that's predominantly being driven by mobile phones. So the people are accessing the internet from their mobile devices. In 1996, when the e-commerce started to take off and internet penetration busted through that 20% barrier here, the average US consumer had over 5 cards in their wallet. So very easy for them to transact. They type in their 16-digit Visa card number into the website and were able to perform that transaction. If you look at China in 2006, when they busted through that 20% barrier, the average banked consumer in India, or the average consumer in China, had over 1 card in their wallet, and that was generally China Union Pay. So again, those consumers were able to transact online. They had a digital form of payment. If you look at India today, when they're starting to go through that 20% barrier, they are less than 0.4 cards per consumer, bankable consumer in India. That's why today in India, over 70% of the e-commerce transactions that are performed are cash on delivery. The box gets delivered by their local equivalent of UPS, and the consumer hands over cash. That's a very expensive transaction for 2 reasons for that e-commerce merchant. First of all, they are having to bear the cost of all the breakage that could happen in trying to get that cash collected. They also have a negative working capital problem where they aren't having to pay their suppliers before that cash gets all the way back into their bank account. So you think about it here. As soon as that good ships from Amazon, your credit card's charged, they're getting those funds well in advance of them having to pay their suppliers. That's actually reverse in India for these e-commerce vendors. So India is going through a complete revolution in terms of e-commerce, and they're expected huge amount of growth there. But there's a drag on that whole economy, which is they don't have a way of paying for those digital goods. And one of the areas that we see is a lot of growth out of money on mobile is helping to fix that problem, both for the consumer and for that e-commerce merchant. Having those consumers be able to come into our shop, hand over cash, order the goods from that shop, have the goods delivered to that shop, and when they're delivered, come and pick them up. So now the consumer doesn't need a digital form of currency. They can still transact in cash, go into one of our shops, and it solves a second problem for that consumer because there are lots of addresses within India where they cannot receive deliveries for various reasons. It's too risky. The banks don't know exactly where that location is, so they can't figure out who that customer is or where to get it delivered. So the consumer can now transact online because we help them digitize that cash, and they have a physical address for where those goods can be delivered at one of our shops. So as India kind of goes through this huge growth of e-commerce, we're in a great position to help both the merchants get a better handle on their cost of getting paid, as well as helping these consumers get online and make e-commerce transactions.